Okay, starting stream. We'll wait for a few people to pile up, and then we'll go through non-farm payrolls, how we treat them, and how we can work around them. Clinton. Okay, how's that? Is the volume fixed now? Yo, morning everybody. Okay, turn it up. It's up now, so okay. What about now? I can still turn it up if it needs to. What's up? What's up? Okay, good, good. So today is non-farm payrolls. I need to bring up the news data actually. Then we'll go through. Trump is speaking as well. Fucking Trump. Okay. Here is the news data for today. As you can see, we've already had a non-farm payroll data release, and then that caused quite a spike. We've got Trump speaking at 4 p.m, which should be pretty irrelevant to today's price action, so don't really need to worry about that. I'm going to go into my other chart, and then I'll come back to this one, just because it relates to how we were looking at our week. So in the weekly outlook, we were predicting this to form a market maker buy model, and this was a beautiful one-shot, one-kill setup where Tuesday makes the low of the week, and then Thursday ran all the way up. But then Friday, usually you want to see a level of retracement, but with non-farm payrolls, you can expect it to just, do whatever it's going to do. So now I'm looking for all these bundled up highs here to be eventually taken out. So far, we've taken out up to there. So it's just these left. 1, 2, 3, 4, 5 lower highs. Shouldn't be too hard to take out. And we have to see how this hour closes and then how the next one opens. In the 15-minute, it's a beautiful market maker buy model where we consolidate, distribute lower, smart money reversal, distribute higher, low risk buy, which this here applies to swing grading. If you've looked into the swing grading lecture I taught, it's titled on the YouTube channel, Grading Implied Ranges. It's really simple. It's really simple. Well, you expect consolidation between lower quadrant and equilibrium, and then when you trade up into the 0.75, you get a drop back below into either the consolidation low, sweeping the consolidation, and then trading back into the highs, or off an order block inside that consolidation. So here you'd use your implied range up there. This is the low, and that's the high of the implied range. But that's not really that relevant, as long as you just know we're aiming for higher prices. On our weekly chart, we've got this order block, so from August 18th to August 25th, these 2 weeks were down close weeks, and then if we close above this candle's closing opening price there, then that would be a change in state of delivery for the incoming week going into next week. So we don't really need to worry about that right now. That'll be weekly outlook material. We're going to go into a 5-minute chart, and then we'll talk a bit about non-farm payrolls. In fact, we'll look at the London setups as well today. So we've got some relatively equal lows there, which we took out with non-farm payroll. Yeah, nothing too interesting. This is always going to be the unpredictable leg in price. That non-farm payroll candle. It's your worst enemy, so don't trade that. Never put money on the line. But let's go through the London session. So it traded into this order block, took out this low, that internal range low, and then there was no real way to trade that in terms of a silver bullet because it was just consolidating. What was yesterday's PM like? Very one-sided. No real silver bullet opportunities there. Just traded higher. Okay, non-farm payroll. When you have non-farm payroll, I need to full screen it. When you have non-farm payroll, it's 8:30 high impact news. You're not trading that at all. So in the lead up to non-farm payroll, you're usually not going to get the best price action. But non-farm payroll, if you just simplify it, you get rid of any kind of data and whatever complicated stuff. It's an injection of volatility at the 8:30 a.m. high impact news thing. So how can you view that from the lens of taking a trade? Obviously, you're not going to be trading the 8:30 candle because that would be complete gambling and degeneracy. We will never do that. It wasn't actually that big this time. It was only 76 handles. Normally it's bigger. But how would you view this? Everything in the build-up to that 8:30 candle is setting a sentiment for retail traders to get manipulated out of their positions. So going into London, where we have a little bit of a drop down, we consolidate, we leave London, we consolidate. There are zero trading opportunities here. That's a common characteristic of a non-farm payroll Friday. In the build-up to 8:30, where you have that news release, there are no large funds in any positions down here because they're waiting for that data to get released. So how do you treat that 8:30 a.m. news driver? You treat it like the 9:30 market open. Yes. So on a day, especially when you're consolidating a heavy amount with a high impact news event and one of the main ones like CPI or non-farm payroll or PPI, you're using this as the 9:30 market open. So if I go to yesterday's AM session, see how it looks kind of similar, where you're just building up and then you clear one side of liquidity, you clear another side of liquidity. You can view this with the same characteristics as that. So 8:30 high impact news, you can treat it like the market open, but you're not trading it. You're waiting for information to be relayed to you, for it to be put on the chart in front of your face. It needs to be glaringly obvious what it's doing, where the new range is being formed, and where price is going to go. So we're opening up in about 5 minutes. That high impact news is what manipulates everyone out of their positions here. So who's left in a trade? Everyone from yesterday who was in New York PM, and then everyone in this Asia session who took a long. Go up to your daily chart. Would they have already taken profits? Potentially. But say they're aiming for this, these bundles of highs, that would be, their last little target. Not little target, it's a big target. So if we want to take it there, then the algorithm's going to give some measure of retracement that drops price, scares them out of their positions, and then it's going to go there. Most likely. That's what I would expect. So come 9:30, I'm not looking at a straight shot up into that low resistance liquidity. being this. It's clear on the 4 hour. So these highs that are bundled together, we're not looking for that to get traded into right away. We want that as our draw. But before that, to trade into that draw, we need a level of retracement down. So we need price to change its state of delivery from bullish to bearish temporarily. And then if all other factors align, then we can, so this is a state of delivery where it's selling off. If all other factors align and we can confirm and move higher, that's when we would trade looking to enter towards our draw, which is this low resistance liquidity run. So that's the plan for today. If it just takes a straight shot up and it shoots away, then we don't trade it and we miss a trade, which is fine. Big orange speak. Yeah, I know Trump is speaking as well. How did you choose that point of retracement? Well, it's not specifically, it was just an example, so I'm not saying it's going to drop there and then go higher. I'm just saying that I would want some level of retracement. It could drop, into this mitigation block and, whatever. What if ES has already taken out the high? Irrelevant. If ES takes the high, but the indices are still bullish, the indices are going to go there anyways. It doesn't matter that there's that temporary break in correlation, because it's not necessarily a break in correlation. Just because ES takes out the high and NASDAQ doesn't do that, doesn't mean NASDAQ is going to instantly drop. It means that potentially it could drop as a break in correlation, or it's just lagging behind and it's being primed to go higher. So we're looking at this data low. Pre-market low plus data. Why can I see when Trump is speaking? If you go to forexfactory.com, then you can get these. It's a useful economic calendar. So he's speaking at 4 p.m. today. I'll go through the website later on if you want. I'm annoyed of my old trading view NQ drawings got deleted automatically. That's a shame. Okay. Realistically, I don't see it dropping all the way down here to like 650 and then trading up again. So once it takes out this pre-market low, the max I would like to see it go is Asia. And then potentially use an inefficiency here to go higher. Like that's, for me, that would be the max it should retrace. But honestly, I would be surprised if it comes all the way down here. I think looking at the 5-minute chart, we'll just get a temporary change in state towards the downside and then probably trade above it, use it as an order block, and then go higher. But just a guess. You don't really want to be predicting prior to the New York Open with non-farm payrolls. You can just chill. Sit, let them take it where they're going to take it, and work after that 10 o'clock hour, because that's where all that conglomerate liquidity is going to be entering the market. Non-farm payroll was negative. Does that not reflect on price action? To be honest, I never even consider what the non-farm payroll data is. It's irrelevant to me because that data is just being, or it's a tool that they use to control the retail traders. I don't look at that at all. I put no importance on that data. Okay, so here's our opening range gap. If you haven't been here for the previous lectures where we explained it, if you go to your regular trading hours chart, looking at a futures contract symbol, so NQU, that won't work on the US 100 where it's the CFD, and you go from the 414 closing price. On the wrong chart, on the 1 minute chart. The 414 closing price and the 930 opening price, and you get this beautiful little opening range gap. It's the big one today, so we're working with 180 handles of an opening range gap. If you remember from the opening range gap lecture, I said that when you have a gap bigger than 120 handles, there's a few situations that can happen. Sometimes it will just literally fill the entire thing in instantly, or like it'll just display slower and take it in. But generally you're looking for that consequent encroachment or 0.25 level. Well, 0.75. I've got it drawn out wrong. So we gapped up, we're looking lower towards these two quadrants for support. The two quadrants being 0.75 and 0.5. If that doesn't make sense, ignore it and, come back to it another time. It's fine if you don't understand that. Would you use the fib from 830 low to the recent swing high and look for optimal trade entry? Nah, not really. Not really, because it's a data candle, and this run was caused by data, so I assume you mean like this. It could drop in there, I'm not denying that, but to me that's not the basis of anything for me. I'm not looking at this as something to hold significance on. Okay, so we just took out that pre-market high, being these two highs. So that was taken out in the 930 candle. I expected to drop a bit more. No problem. Okay, we have 31 viewers and 9 likes. Let's get some likes. Let's get some people liking the stream. Okay, so this is a very important fair value gap on the 5-minute chart. I want to have that marked out, and although we're looking at that as an inefficiency, say it's just gonna bounce off this point, I would expect it to go no further than this little bounce price range if it's gonna bounce from here, but it could just go down and fill into 0.5. That's always a possibility you want to make room for with a large opening range gap, that it just instantly drops and takes 0.5 or consequent encroachment. Do you smoke cigs or weed? No, I've never touched a drug in my life. Never. Price is in the 18th of August new week opening gap. Yeah, I'm just not looking at new week opening gaps at the moment because I haven't told them yet, so. I don't know why I sound like this. I don't smoke, I don't do drugs, I don't do nothing. Okay. I can see you potentially using that, but I like the 5-minute one more. I think this is going to be more accurate. He smokes other traders. I smoke the retail pockets. Okay, we're looking for a first presented fair value gap now, which I'm going to start incorporating every single day in the tape reading because it's a pretty simple premise. After 930, you're looking for the first fair value gap that forms. So you're starting from 931. Say there was a fair value gap there. You would use that as a first presented fair value gap because it's the first one that forms after the AM session starts. There are some situations where you can use the 9:30 one, like today. If you have high impact news at 8:30, so today we had non-farm payroll and unemployment data at 8:30. So you would be allowed to use the 9:30 candle as a fair value gap. I'll come into it later when one of them forms. That's nice. I like that it wicked lower and then closed within the fair value gap again. But it will need to invert this order block to be of any significance to me. That one. And then we also have this mitigation block. Why is that a mitigation block? Because we have a low, we have a high, and then we have a higher low. So it's the opposite of a breaker block, where with a breaker block, you would want it to trade below and make a lower low. With a mitigation block, it's the opposite. You want a higher low. Anyone who's in a sell position in this price leg lower, they're in sells. As price trades up, their position's going underwater now, so they're in drawdown, and they're not willing to close it until it gets to our terminus point, being our whatchamacallit, our low resistance liquidity around there. So their positions are underwater. Then when price trades back into it, they're being offered break-even pricing. So at this point right now, when price trades into that, the algo's offering them a way out of their position, basically enduring zero loss, because although they were underwater, now their positions are back to break even and they can close it at zero without losing anything. So that's a bullish PD array that you can use. A mitigation block is a type of order block. Same goes for a breaker block. A breaker block is still a type of order block. So you would do it through every consecutive down close candle. So you wouldn't include that red one because it's not a down close candle. Then you can use the midpoint on these, or mean threshold. So they've come into our upper quadrant of the opening range gap. I would like to see the 5-minute candle respect this. On the 5 minute it's an order block. On here it's a mitigation block. I would like to see it respected and potentially trade up towards this fair value gap again. There are so many possible scenarios here. On a bullish order block, do we use the bullish wicks but not the bearish ones? So when deciding whether or not you're going to use a wick or a body, it's about the candle size. It's not to do with the direction or price action. It's just about the candle size. So if I'm using this as an order block, I'm only incorporating the body because that wick is too far astray. But if I'm using just a candle like that, then I would also incorporate the wicks, but I would treat them with a grain of salt. I'm not looking at them to react instantly like I would with a full-bodied order block. Like that is a strong bodied order block. But when you have an order block like that, where it's small and it's done with a wick, then you want to put less emphasis on it, and yeah, you extend it to the wicks, but the sensitive part is going to always be the opening price. gap's real nice. I like that. I like that a lot. So on the 5-minute order block, it just went through the midpoint, and then on my 1-minute chart, it fell short of consequent encroachment, and it's leaving this gap open. Leaving that gap open makes it what? It makes it a breakaway gap. I'll leave it white. So leaving this gap open is really nice because it shows an unwillingness to even trade below that. So if we can invert this bearish order block, I like a trade higher. But then it's like, but where's your draw on liquidity? Well, in this situation, I would use a fulcrum, which is a way to measure standard deviations. So I would use from that high to this low, and I put these standard deviations on. So 1.5 and 2. I have a full video on this, so I'm not going to explain it all here. But that's what I would look for. Again, I have a video on that. It's called How to Use Standard Deviations. So, yeah. So that's not been inverted yet. Trading above, but not closing above isn't enough. You need it to close above. Okay, it didn't close above yet, but we'll see if it wants to. Yeah, inversion fair value gap. I like to make my inversion fair value gaps orange. Don't know why. So it's looking pretty good as long as we close above, but it's gone back into that busy. It's only a small busy, but that should still be okay. See what kind of displacement we're looking at. Nah, it's an inversion fair value gap on the 5-minute. On the 1-minute, I can see that, yeah, you would look at it as as a reclaimed, but because we drew on the 5-minute, we'll stick to it being on the 5-minute. Oh wait, no, I'm wrong. Yeah, it's a reclaimed. Sorry. It's reclaimed because it traded below and then it traded back above. Yeah, I'm stupid. Don't listen to me. Okay, I don't want it to create a mohawk pattern, I want it to stay above. That's still a little bit better, but it's still not really encouraging. Yeah. Let's have some more. So why do we wait until after 8:30 to consider trade ideas, and then why is it better to just wait for the 950 macro? Because you have this non-farm payroll data being released. Price is going to be held in consolidation until that's released. Why? No large fund, no conglomerate entities are going to be placing orders before such a heavy duty release like non-farm payroll. So as a result, no distribution needs to occur, no smart money pricing needs to occur. Nothing special is going to happen until non-farm payroll is already released, and then after the market's opened, then you're going to start to see that level of large funds putting their money into the market. And that's visibly, displayed with the idea that we had literally no real price movement going into the 8:30 hour. And then at 8:30, shoots up because of the news, and then the news comes in, and that's the excuse for the 8:30 candle. But the rest of them, that's not affected by news. That's because now the large entities are entering the market, and their orders aren't what's moving the market either. The algorithm's still moving the market, but because the large entities are in now it has a reason to move again. Before that, it's going to hold people in consolidation to engineer a sentiment that price is going higher, and then it fakes, and then it goes lower, and then now they're thinking, okay, it's going to go lower, consolidates. Oh, it's going higher, consolidates. News manipulates both sides of them out, so anyone who's in a buy, manipulate out. Anyone who's in sell, manipulate out. So yeah. Gaming, could this be because of the futures contract changes this month, or they'll go on regardless of layout / asset? Oh, you're asking him. Yeah, I know. That's a shame. I did that recently. I had all of my new week opening gaps and new day opening gaps for like the last 6 months on here, and now they're all gone. I still have some left because I've drawn them on recently. Look at that. Really nice how it dropped below there into the bounce price range. This indicator is pretty handy though. ICT NDOG. You can literally pick how many NDOGs you want, so I just have 6. It draws them out automatically for you. But it doesn't draw the current day, I don't think. Okay, so on the 5-minute, it was an immediate rebalance where we leave the candle, or we close up there. The candle opens, it trades all the way down into the low of that, or the close of that, sorry, and then it's traded back up. So it's the idea of this forming an inefficiency now, that's gone, but an immediate rebalance is even better because it shows speed and price. So I would expect some type of incoming volatility because we have 950 to 1010 macro, and then we also have, what should we call it, that immediate rebalance. Do you have the best trading view subscription? No, I have like premium or something. I don't even need the best one. I only really use one chart if I'm trading myself. So I could use the free plan if I wanted to, really. It wouldn't make a difference. For the stream, I use 2 charts because it makes it easier. But what I like is I have another chart on my laptop screen, and then I have one on my monitor. And then I don't need this layout thing. And I don't really use the 2-minute or the 4-minute chart. Sometimes I use the 6-hour, so that's the only real use case for having the membership. But other than that, I could care less. The V does lower term high. long-term high and intermediate term high mean those highs and lows are more protected. What is the relevance of them? So a long-term high, if you're bearish, shouldn't be taken out. A long-term low, if you're bullish, also shouldn't be taken out. If that gets reached into, then you have to entertain the idea that it's going to be a continuation. So this is a long-term high because it's between two intermediate term highs. I'll do this. If you're bearish, that should be taken out. Trading above that is good because then you get the idea that you can continue, so continue high. But obviously it can go from external range and then go take out internal range liquidity as well. So you just need to entertain the thoughts of both. You need some type of subscription for real-time data. Oh yeah. I have real-time data, I think. Like, I don't have a delay, it just updates whenever there's an update. I don't know what to do in this situation. You should just chill. Let them do what they're gonna do. You can look for entries if you want, but when you're uncertain, you don't need to do anything. Yes, just so you know, at least basic tier is needed. I have the other one, the premium one. Oh, wow, there's a big drop there. It's a bearish order block. Some discount pricing. Okay, so here I would be looking at the 9:30 opening price. Wait, where's my opening range gap? Whoops. So that's the 9:30 opening price. I would be looking at that for discount premium. And I'd also be looking at 8:30 because we had high impact news. So anytime you have high impact news, then the 8:30 is going to be really important. And I wouldn't really use midnight from here because it's all the way down there. And we have a bullish drawn liquidity, and we shouldn't drop down all the way into midnight price. Like, it would be completely insane to drop all the way down to midnight for discount pricing just to go back higher into the drawn liquidity, which is hundreds of handles away from midnight. Then you want to refer back to the 15-minute chart. Still got that, still got that. Oh yeah, first presented fair value gap now. And it's valid because it's breaking away from a range, so you can still use it. Why isn't it like that thing? You wouldn't use that because it's just tiny. That's no other reason. You don't use inefficiencies or any PD array that is negligible in size. I have to zoom in a lot to see that, so it's not relevant to the underlying price delivery. Okay, this gap's been traded through a lot, so I'm placing less significance on it now. The PD array I want the most would be this. To trade above that as an inversion, that would be really powerful in bullish price delivery. Okay, let's get some more likes in the stream. Blue's a good color. I like blue. Yeah, you can get first presented fair value gaps of a lot of things. So you can get first presented fair value gap of the hour, of the month, of the week, of the year, of the session, of the opening range. So that's just a good thing to know. I have a video on first presented fair value gaps. So hungry. There isn't a whole lot to look at here because it's just held in a range again. You want to note that this is a bearish order block. Yeah, I should go to that when it's... In fact, let's break down an order block. An order block is a temporary change in state of delivery. So we have sell side delivery in this down close candle from 952, and then temporarily with this 953 candle we get buy side delivery. But the underlying direction on a zoomed in scale is bearish, because bearish trades up and it's bearish again. So once you trade below that, especially if you trade below it and you create a fair value gap in the process, even if it's a small one, that's a good or a valid bearish order block. So that's when you would use it, and there we didn't pierce through the mean threshold just being the middle. So we didn't go through the middle of it. But when you're chopping around back and forth, you don't place a huge amount of significance on that until you leave the range. Doesn't it look like a bearish unicorn? Not really, because it's not really a breaker block. It's just an order block. Okay, let's see what the last half of the macro gives us. Until you can get that level of algorithmic footprints where the chart's printing off a good amount of information for you, you wouldn't take a trade. But this is nice for lower prices. It's So that first presented fair value gap forming in the macro, that's what you want to see. It doesn't matter if it forms in the macro or not, but because the macro is where you're looking for those footprints, and the macro is what printed it, now your mind should be keying in to the fact that, okay, we might be getting price delivery here one way. So it might switch from consolidation to distribution. So this is no longer a breakaway gap. Now it's just a gap. Just want to double check the 7 a.m. 1 hour candles break block. Nah. Low, high. No, but it's not a swing point, so no. 30 minute. Low, high, low. Yeah. Yeah, it is. It wouldn't be my choice of PD array, just because that it's kind of consolidation, and then that insurge of volatility comes in, which creates it, but it's a news candle. So would I use it? I wouldn't place a huge amount of emphasis on that one when I have the busy here, or the order block, but it's still valid to use. Okay, this now fits the definition of bearish order flow. I think I've gone through it before, but bearish order flow is when up-close candles are providing resistance for sell-side delivery. So every time you trade up, price uses that to trade lower, and then every time you enter that up-close candle, it's being provided resistance to go lower. So up-close candle trades below it, validating it as an order block. Then we get this SIBI here, and then now you want to see that being used as resistance. So that's a good entry if you're in sells. Targeting consequent encroachment. So we reached down into an inefficiency, and we took out this low. So for a silver bullet now, a bullish silver bullet into our drawn liquidity being, being this, that low resistance price run, because it's a bundle of relatively equal highs in the same spot. So if I'm looking for that to get traded into now, I want to see something inverted and a market structure shift as well. So if that becomes a shift in market structure, that'd be really good. And if that becomes an inversion fair value gap, that would be really good. But I would want both of those things to be present in price, because it can trade above this and then quickly trade below. 10 a.m. candle is SB. What's SB? Oh, silver bullet. Well, a silver bullet is the entry, not the liquidity sweep. Okay, so now you want to be keying your eyes, because we've taken out a pool of sell side, and then we've also got resistance off the breakaway gap, which has now just turned into a fair value gap. You want to see something that sends it up into this market structure shift and inverting this fair value gap. I'm going to fade this one because I'm placing less importance on that Why am I placing less importance on it? Because it's been traded through a lot and it hasn't really served very well. So I'm not looking at that as a big inefficiency anymore. I'm still using the first presented fair value gap, this fair value gap, and this fair value gap. No dice. So through the lens of a silver bullet, what you wanted to happen didn't happen, so you don't get any buys. Therefore, you just sit and chill. Nothing to do. Just watch and observe. Maybe I'll run into the data low. Potentially. I can see that happening. I'm curious what we're hunting now. Yeah, I would assume this. It's a data low. Because it's also the pre-market low. Didn't I mark it out earlier? Or did it go? I don't know. Yeah. If we can take this before 10:30, it would be really nice because after 10:30, a liquidity sweep. Well, sorry, prior to 10:30, a liquidity sweep, and then post 10:30, a market structure shift or something that gives you supporting displacement higher. That's like, in my opinion, that's best case for silver bullets because then it becomes really obvious after you've already done all the work of that little chop in the morning, whatever the macro did, that liquidity's been swept, all the work's done, and it's just left behind a drawn liquidity. So say you trade into this low, and then 10:30, around 10:30, you get that displacement. Now it's kind of obvious where it's going to go because there's only really one place for it to go, and that's your drawn liquidity, your bullish drawn liquidity. So that's the easiest silver bullet setup post 10:30, in my opinion. Got 40 people, 4-0. Like the stream. Like the stream. So down close candles are supporting price or resisting price lower. Resisting price lower. I said it wrong. Up close candles are providing resistance for down close candles. That's what I meant to say. Yeah, there isn't that much going on except for I would like this first target and then this pre-market low. Well, up close candles are providing resistance to upward momentum, resulting in more down close candles. Yeah. My English is shit. What do you think of the previous session highs and lows, Asia or London? Well, London's high and low have already been taken, so I'm not really looking at those anymore. And then Asia low, I don't expect to go all the way below Asia, really. Well, actually, I guess it could. I guess it could. Yeah, it could. I don't know. I'm kind of uncertain about today. I'm not liking it. Like, every other live stream, I've been really confident in where it's going to go. I've pretty much just said it. It's going to take pre-market low and go into the opposite side or whatever. But today, I don't really know. I marked 1021 as Asia low. Looks solid to me. 21. 1021. That one. 1031, yeah. That is a good low. It could trade below this low and then go into the order block. I can see that. I can see that happening for sure. Asia's internal range liquidity. Pinkify. Yes, just hit true day open. YM to reach a 4-hour high is not relatively biased to go time. Oh, really? Yeah, nice. That wick should be support for YM. Just slow grind low. $23,700 is a chunky volume balance on the 4-hour. Could be support for take day low and keep going. Let's take a look. Yeah, I could trace into that volume bounce for sure. I kind of like the idea of the 4-hour being an order block and then trading above that and using it as support to go above here. But this might carry on until Friday, getting above these low resistance highs. I don't know. Tricky. I like how we had back and forth movement until the macro started. Directional move. Can you please do university level series on Enigma and ICT's logo? Yeah, I am Enigma. No, I'll do ICT's logo. I'll do it right now. ICT's logo is really simple. Can you see that on your screen? Yeah, you can. Okay, I chose the most blurry image for some reason. But all this is power of 3 in fractal form. So the big circle, that's power of 3, and then every circle within it is power of 3, and then every circle within that is power of 3, and then everything within that is power of 3. So the idea behind the logo is just it's power of 3 occurring within power of 3 within power of 3 within power of 3. So in every accumulation on the yearly chart, there's power of 3 happening 1 million times over on whatever the daily chart, and the 4 hour, and the 1 hour, and the 10 minute, 5 minute, 1 minute, 1 second, everything. So it's just the idea that the algorithm's always accumulating, manipulating, and distributing within every time frame. So it's flipping through all the time frames, like providing that AMD. So this is, it's not the algorithm source code, obviously, but it's the idea of the principle that the algorithm operates under, that it accumulates, it manipulates, and it distributes, and then drop a time frame and it's doing the same thing, and then drop a time frame, it's doing the exact same thing on every single time frame. So it's IPDA, basically. Price is exactly on the NLog and below 830. Yeah, look, we're not using NLogs and NDogs yet. That'll be next week. Yeah, power of 3 is what makes me the most money. Power of 3 is amazing. Like the classic buy day template, I wanted to teach that, but it would be like a 2-hour video, and I don't have the energy to make that, so I could do it on a live stream instead, maybe one of the weekends, because that's my favorite model. I trade it not just on NASDAQ, I trade it mainly on euro dollar for pound dollar, and occasionally on gold. And then for my swing trades, because I do trade forex as well, I use one shot, one kill, which is like an extended version of the buy day template. A buy day template is simply just the day opens, you get a Judas swing below midnight opening price, it distributes higher, and then it retraces 20 to 30% of the daily range, and then that's it. So this is the entire idea behind power 3. You start off with consolidation, that would be Asia session. You Judas swing lower, that would be London session. You distribute, that would be New York AM and PM. And then you retrace back with either the PM or that market on close. So that's basically just power 3 in a nutshell. The buy day template, the sell day template, the one shot, one kill. If you understand this, it really helps with just understanding the market in general. Like, that concept was the click moment for me. You know how everyone has that click moment where, oh, I got it, oh, I got it. When I understood this, that's when I understood like price action in general. And then you combine this with different times of the day, PD arrays, and seasonal tendencies, especially if you're swing trading or day trading, where you're taking a trade across 1 day, 2 days, 3 days, like I do on Forex. This concept applies extremely well, and it will best serve, well, pretty much will only serve, under the guise of institutional order flow. So if you have a one-directional, one-sided market, and there's ways to identify when that's going to happen, which is otherwise known as institutional order flow, where it's just going to trend in one direction. Everything will just trend in one direction. Then everything in a market like that, a market that's operating under institutional order flow, one directionally, is going to be using this. So that's where the ICT logo comes in, where if it's one directional, it's power of 3. And it's obvious power of 3. It's easy power of 3. This is what makes me the most money, because, to be honest, it is really easy. Where as long as you can identify institutional order flow and the signs of a one-directional market, and that comes from macro interest rates, and it comes from a lot of things like seasonal tendencies and correlations in the dollar and stuff. You even factor in like black swan events. But if you can anticipate a one-directional market, then you basically know how that market's going to trade. In a one-directional market, everything will do this. On every time frame, it's going to be like that. That's very messy, but the week week will be like this. Every weekly candle in an institutional, I mean, not every single one, because you're going to get short-term changes in state of delivery where we trade lower and then you trade above and then you use it and then you get power 3. So like that. But it sounds complicated. It's really simple, really. So I haven't traded the euro-dollar since the start of August, because it's been like this. It's not one directional, so I can't really look at it in that power of 3 way. Same with the pound dollar. It's just been held. Whereas in like June, July, I had quite a few one-shot, one-kill trades where I captured most of the weekly range with that model. And in Discord, in maybe June or July, I took a trade. I took it in the morning. I signaled everyone. I basically said, hey, I'm in this trade. It's a classic buy day. And I was in it for like 8 hours. Or I bought it in the morning. Or I sold it in the morning. It consolidated, and the AM session came by, it dropped a bunch. And then a lot of people messaged me after that saying they copied it and they made a lot of money. New day opening gap hit on Nasdaq. We're not using it anyways. Swept current day lows, new lows. Could you share anything regarding objectives price aims to reach per day, per week? What would I say? I would say you time it, mainly. So the London kill zone isn't going to usually go and take out, well, yeah, the London kill zone is going to take out previous week high, previous week low. So there's ways you can narrow it down to different times of day. But then how far it's going to go is, that's when you have to combine all the concepts together. So that's when I'm using fulcrums, I'm using the idea of a one-directional market, I'm using the idea of daily profiles, a lot of things. So it's not like I can just give you a 3-step setup and boom, it's done. But yes, it's a bit different. Okay, so our long-term high is intact. Trade lower, full gap closure. It took a while until 10:20. But we do have a full gap closure. This is low resistance, so it could just easily trade below that. I didn't think it would, but looks like it will. So today I got it wrong. We've done 7 live streams now and 1 YouTube video in the series. I got it wrong once. Not bad. Okay, so well, I'm not going to go through TGIF. This is still bullet mentorship, but this is TGIF. What's everyone got planned for the weekend? I have to go pick up a new suit, and then horse riding, and that's it. Then it's back to trading. Up close candles providing resistance for down close candles, or for upwards momentum. That's bearish order flow. Chilling and studying, nice. I was going through 2024 again, and I'm on lecture 7. Oh my god, so hard. Floating in a pool as many hours as possible. That sounds nice. Can I pick up any Lambo? Continue moving back to my house. Should get me a Lambo as well. I wouldn't mind a Lambo. As long as I'm not paying for it. I paused 2024 at the 9th episode, decided to rewatch 2022. I feel that is more useful at my current level. Yeah. I think the last half of 2024 is really nice in terms of gems, but there's so many hours of rant that you have to get through to get one gem that it's annoying. But I'm just going through to refine my notes on it. After stream, I'm gonna get some food, and then I'm gonna watch the lecture 7. See if I missed anything. That'll be my fifth time watching 2024. And then once I go through that, I'm gonna go back through 2019's private content and 2022 private content, because I didn't watch the market execution videos that ICT made for 2022 yet. Is it some bomb ticking? What does that mean? Oh, it might have been my chair. Chippy. Okay, what's happened? Traded below Asia. Traded into New York PM. We've got that order block. So with Silver Bullet, there's no buy trades here really. I wouldn't take a buy anymore. Was I in ICT's private mentorship at some point? I wasn't part of the alumni, no, but when I started, I had access to that private content. So my first introduction on or to trading was the private content. But he was into optimal trade entry quite a bit at that time. I had leakers giving it to me for free. But no, I wasn't part of the private mentorship, no. I have the content though. Family's thoughts on you trading V, they don't like it. They don't like it. They still think that I just click buttons all day. Which is exactly what I do. Nah, they don't like it. They would rather me do some back-breaking labor job for some reason. It's very frustrating. Very frustrating. And I want to move out because who's going to be with my family? They'll get you. Yeah, I understand why it looks like a scam, because, you know, I get it, but then the results are there. Whatever. Doesn't matter to me, really. Do you consider big figures? Not on index. No, not really on index. I do on Forex, but not on index. I don't know. I back tested it in Forex, and yeah, it works very good. But when I'm back testing it on index, it just doesn't have the same results, so I don't really care. Your parents are white British. Yeah, it doesn't really matter. My parents are from Mars. What's Discord up to? Someone says... Okay, let's just go to Discord. There's nothing in price action for me. I'm gonna... Oh wait, I need to go through that website first. Okay, we're gonna take the chart off and I'm gonna show you my screen. This... Okay. Let me check if you can see it. Yeah, so you just go to forexfactory.com/calendar, and then what I do is I clicked on this and I filtered it so I don't see the yellow one because it's not really of any importance. And then I put this one on so I could see bank holiday. Orange is good so you can see when the president's speaking, and then red is high impact. That's going to be the main one. You want to use both of these. Obviously, we're just mainly looking at the red folder, but sometimes orange is applicable. And then you also want to filter it for the dollar. If you're trading Forex, you can, use the right ones, but for index, you just need the dollar. And then I changed the time to New York time. I don't remember how I did that. But yeah, then you get access to the entire calendar. You get from, you don't just get this week, you get far into the future. So. Appreciate you, another great stream. I'm not going anywhere. I'm not going anywhere yet, but yeah, bank holidays. So if there's now a break of structure, you wouldn't enter, even if it's a silver bullet setup. Yeah, I wouldn't enter because it could potentially just trade through all of that, and I don't really want to be part of it. Because it's done work on both sides, so I'm kind of like, I don't really like it. Why do I have a grey one? Oh yeah, for bank holidays. Okay, let's figure this Discord out. Okay, I'll show it. Yeah. So this is where we used to do live trades, in Velox trades. I used to ping an alert whenever I entered a trade like that. And then whatever, so rejected event horizon, took some buy side liquidity, coming into the macro, looks like a clean silver bullet. And then, yeah, that's what we do in the Discord, and we also have daily analysis. I don't do the live trades anymore, by the way. So daily analysis, we had, if you remember yesterday's stream, 4th of September, I mentioned that it would allow us to go into the intermediate term high. Sorry, it would go into the bounce price range from yesterday's New York PM session, and then trade higher into the intermediate term high, which is exactly what happened yesterday. There's me outlining it. So I'm not just doing it cherry picking. Today's bias was to go through that previous week high and then trade towards the low resistance liquidity run, but we only went through the previous week high. We haven't done the rest of it. That's all right. Is there any chance to go for a reversal in this situation? Yeah, but I'm not interested in anything. Just because I got it wrong, so I'm like, okay, I'm not gonna put a firm prediction now in the marketplace. Which I didn't think it would go past Asia, but it did. So Elric was wrong today. I think we'll sit with it until 11 o'clock and then, yeah, then I'll probably go. Last time I traded a reversal on Friday and got stopped out. Look, every Friday isn't going to be the same. So the characteristics of a Monday, Tuesday, Wednesday, Thursday, or Friday are determined by the economic calendar. So just because something happened last Monday and it happened this Monday doesn't mean it's going to happen next Monday. You have to look at A, seasonal tendencies, B, correlated assets, and then you also have to look at the economic calendar. So is there non-farm payroll that week? Is there CPI on whatever day, Tuesday? There's a lot that you have to consider, not just the day of the week. You also want to be looking at things like, well, things just listed off. So a characteristic of a Friday in a trending market environment is to retrace on the weekly range, yes. But that doesn't mean there's no silver bullets. That doesn't mean every Friday is going to do that. It's because if you've had a one-sided week or a week where you've recently had displacement to the upside, then on Friday you would likely retrace, which is your thank God it's Friday setup. But just alone using the idea, oh, it's Friday, it's going to retrace, that's a very flawed methodology, and you need to, not use that methodology. Is that yellow rectangle the silver bullet fair value gap? I did say earlier you could enter on it, but that wasn't what I was looking for silver bullet. I wanted an internal range liquidity pool taken and then to trade higher, but we didn't do that. We took out that short-term high, TLC, and then first percent fair value gap, and then we just drop. So I didn't get into anything. But I did say that could be a good entry if you're selling. I did say that, pretty sure. Do I trade crypto? Nope, but I do hold some for long term. Not even a lot though. I tell you though, if my broker used crypto as like a withdrawal system, they allowed you to withdraw with crypto, I would absolutely pick crypto. Crypto is going to become, well, it's not going to become, it is a commodity. So to brush off crypto and say, oh, it's going to just, whatever, it's not going to last long or whatever. Crypto has stayed around for long enough now that it's going to have an effect on the rest of the economy. So if you're looking at Bitcoin, for example, because that's the leader in the crypto industry, then yeah, you would eventually need to incorporate that into some level of fundamental analysis when you're looking at the market as a whole, because it's a commodity now. But, well, it's not a commodity, but it's a digital commodity. I didn't go for the shorts at the macro because NFP was bullish, and last time at Friday I got stopped. So is this a good decision or bad? The Friday part is irrelevant. Just because last Friday you got stopped out doesn't mean this Friday you're going to get stopped out. You know what I mean? I can see what you're thinking, but non-farm payroll being bullish or bearish doesn't really have an effect on, well, I guess it does, but it doesn't determine price direction. Yeah, bullish news. If non-farm payroll trades up, it doesn't mean the rest of the day is going to go up. And if it trades down, it doesn't mean the rest of the day is going to go down. I can see why you would align yourself with the idea that it's more likely to close bullish if non-farm payroll is bullish, because you'll see people on Twitter saying, if the non-farm payroll data is bullish, the day is likely to close bullish. Or if it's bearish, it's likely to close bearish. What they're not considering is every single factor outside of non-farm payroll, and the characteristic of non-farm payroll accumulating in one direction. So, you know, you have to be careful what you read. I think Hanko Trade does that. I don't know who Hanko is. There was a trader recently who fortunately committed suicide because, well, I don't know why, but I would assume it's trading stress. It's very unfortunate. Trading is a very stressful industry. I'd argue it's one of the hardest industries in the world because you're up against, well, the smartest people in the world, and you have to beat them. I can't remember his name. There's fucking Romeo, that CRT guy's scumbag, man. He was making fun of him for trading ICT instead of CRT or something. I don't remember the exact tweet. But a man dies, his first thought is to promote his concept that isn't even his concept. Oh, flipping dickhead. Friday is kind of less predictable, so it causes lack of confidence. That's not true. You gotta get this idea out of your head that certain days are going to be less predictable. That's just, there's way more factors than the day of the week. Friday being less predictable or more predictable isn't a real thing. I can see why you would say Monday is slightly less predictable, or you would dial your expectations back of a Monday because everyone's getting into the marketplace and they're piling in the AM session. But even that doesn't make Monday any less predictable. Yeah, so just, if I was you, I would let go of the idea that certain days of the week are going to behave in certain ways without reinforcing it with the idea of seasonal tendencies, economic calendar events, uh, price action related to the rest of the week, if it's one-sided, if it's held in a consolidation, stuff like that. Because Friday, in many situations, is very predictable. If you have a one-sided week, Friday is very predictable. If you have a premium or discount array that Friday looks like it could be obviously reaching into, it's very predictable. There's so many situations with days of the week that you can't just say a Tuesday is going to be more predictable than a Wednesday or a Thursday or a Monday or a Friday. You have to align that with outside factors, including seasonal tendencies and the economic calendar. You know what I mean? I didn't pick a specific topic for today's lecture because it was non-farm payroll, and I didn't really feel like talking that much today. I still need to plan out Saturday's video, and then weekly outlook on Sunday, and then back to the grind on Monday with streams. Monday's stream is going to be new week opening gaps, new day opening gaps. Some more I could ever ask for. I gotta keep delivering. going, keep fueling the train. If you do this full time, what targets do you set yourself, weekly, monthly, etc.? I set personal targets. I don't have P&L targets because I feel like that when I used to set P&L targets, it would lead me to forcing a trade. And now I just don't have P&L targets. But I do have like targets to study more and journal. So I'll say this month I want to go through all of the 2024 mentorship again. And then, find my notes on it. And then next month, maybe my goal is to go through the 2022 private content again, or whatever. So I have goals like that to improve my trading. Yeah, a target like follow all the rules is a good target. As you develop in trading, you can use less and less rules because the things that once you had to place a limitation on yourself, like trading once a day only, that's a limitation because trading multiple times a day is obviously going to lead to more money if you're good at trading. But in the beginning, you have to limit yourself so that you're not falling victim to that over trading, over leveraging trap. So those trading wheels, eventually they can come off and you can be a bit looser with the way you trade without following a strict guideline of I have to do this and I have to do that and I have to do that. With a model, yeah, it's non-negotiable. But with general trade management rules and execution rules about like how many times a day you can trade, how much leverage you can put behind a trade, you can begin to loosen that up when you get further into trading. So right now, most of you have been doing this for not that long, so I wouldn't recommend doing it. And you should have things in place that prevent you from falling victim to the common pitfalls in trading, like over trading and over leveraging. So you don't want to be doing 3 trades a day. You don't want to be doing 5%, 5% leverage behind your trade. You do want to have things like I'll only take a trade, well, only follow this specific model until I can get this level of results, and then I can look to start expanding my horizons and looking into other mentorships and etc. etc. What I did was the complete opposite. When I started out initially, I didn't have any of those, and I lost plenty and all of my money. And when I made more, then I lost it all again. That's why I always say, like, there's no point trying to learn with real money when you can do it without real money. And you can do it more effectively without having anything on the line, without having your emotions swayed by something, without creating that bad habit of being in an over-leveraged position. And especially when you have a day like non-farm payroll, if you're over-trading or over-leveraging in this, your account's just gone. There's nothing saving you because every little price movement feels like a change in the direction that's about to head in, and then you're cooked, and then you're cooked, and then you're cooked, and then you're cooked. And here you sell, and then it goes up, and then you buy, and then it consolidates, and then, so those pitfalls that you can fall into in a market environment like we have today, where before non-farm payroll, obviously we're going to be held inside a range. But a beginner student doesn't know that, so if they're falling victim to things like over trading and over leveraging, in this market environment, their account's gone. Gone. It's in the toilet, it's down the drain, it's, your studying diligence is admirable, especially when being as knowledgeable as you are. Well, that keeps me knowledgeable. Would you recommend the no-rant version of ICT's mentorship? For reviewing your notes, yes. For first time, no. For first time, go through it all. Go through it all. But then, eventually, when you go through it again, then yeah, you can use the no-rant version. Dems is reading Oxford English Dictionary instead of Welsh. That's just grammatical, I don't know the sense of it, but yeah, TikTok. TikTok is the worst. You can tell when someone uses TikTok by the way by the way, like, you just talk to them. It's obvious when they can't socially interact that well, or they have an attention span of a fish. What advice would I give to you, Clinton? Stop buying funded accounts, first of all. Stop thinking about the money yet. And focus on your learning development. Because I know you want to make, $1 million payouts in Lambo and Beach issues. You don't need any of those things. You need to improve. That's the whole idea. If you're good at trading, you'll get payouts. It's that simple. So why are you aiming for payouts when you should be aiming to get better at trading? That's, the one-liner. But it's true. If you were good at trading, you would get a payout. No, I'm not roasting you, I'm just being in the most respectful way that I can say it. You need to improve your trading. But funded accounts are kind of scams because they give you $2,000 of drawdown to play with. It doesn't matter that it says it's a 50k account. If it's $2,000 of drawdown, you can only lose $2,000. You're trading with $2,000. But then they want you to make $3,000. So they don't want you to actually make 6% of 50,000. They want you to double the account and then make 50% on top of that. Oh wait, no. Yeah, they want you to double the account and then make 50% on top of that. Which is, that's not feasible to do in 1 month unless you over leverage. So don't buy funded accounts. Save up for a live account. Wow. Funded accounts are still good tools. But in my opinion, live accounts are just better. Okay, next macro. No retracements really on the 5 minute, but on the 1 minute you get plenty of order block entries. Hallucination before profitability. ICT's coming back in 10 days. 10 days. I'm so interested in what the new mentorship's going to be about. But I just hope it's not basic again like the 2024 one was. I want some charter level stuff. Okay, we're going to do the macro and then we'll end stream. So let's see if it's gone into on the up PM low. No, hasn't yet. I wouldn't trust this to deliver back up there, by the way. Even if there's market structure shift or displacement, I wouldn't see that as a buy. Are you willing to see price trade back into the range right now based only on the macro? Yeah, with a little bit of movement, potentially maximum let's say is there, but somewhere around here, and then probably trade back lower. Is the first one into fair value get the silver bullet, and can silver bullet be a continuation to the draw liquidity? Yeah, so if you manipulate a high and your draw on liquidity is bullish, you can find a continuation trade. Yes, that takes you into the high. Is the first one fair value gap silver bullet? Technically, that is the highest form of entry, but the way I'm teaching it is when you confirm it with a market structure shift. So you wouldn't have entered until this. That would have been a great entry. Institutional order flow entry drill. So the trade for the day would have been the first minute of February. I got this episode trading time the opponent, so there it wasn't taken. No, so although technically, yeah, that was an entry, there was no market structure to confirm a flip in where we're delivering to. So if you want bearish price action or you want bearish delivery, are you entering there when it's chopping and there's not really anything to confirm bearish market structure? Because although in hindsight it looks very easy, in real time when you don't have any of this, is that enough to enter on? No, I would demand this. That would be stronger because there you've displaced below market structure. Bearish order block, SIBI, then it would be really nice. Because we're not teaching tail SIBs, we're teaching silver bullet. My stop loss be the swing high, and then once we left that aggressively, and then say I entered there, I would have it at the institutional order flow entry drills high. So this, because then it's a breakaway gap and it shouldn't trade above that high again. Okay, yes. Next week is new day opening gaps, new week opening gaps. That'll be in probably Monday, and then Tuesday is, I don't know if I want to teach S&T though. Tuesday will be basics on S&T. Everyone basically knows S&T anyway, it's really easy. I don't want to go through overbought and oversold versions of S&T, so we'll just stick with normal S&T. And then I need to plan Wednesday, Thursday, and Friday. But it'll probably be around equilibrium, stop management, and target placement. Picking the target. Yeah, short-term retracement because of the macro, and leaving that. That's price range. Damn. Everything's about to get cleared, I think. Yeah, large macro. I got a question today about macros. I don't remember who it was, but if you're in here, a macro is 10 minutes before and after the hour. You don't look at anything else. There are a few exceptions, like 8:20, 8:40, and market on close, but for the purposes of silver bullet, just think about 10 minutes before and after the hour. So 8:50 to 9:10 is a macro that you would have used today because there was a news event, and then so is 9:50 to 10:10. So is 10:50 to 11:10. So it's just very simple. 10 minutes before the hour, so 50 past or 10 to, and then 10 minutes after the hour. Five minutes is a really nice bearish order block. So if you can trade back into that, even though you're in discount, it's nice. If you have a draw that's like that. Okay, but it's 11 p.m. I'm gonna hop in Discord for about 10 minutes, then I'm gonna go get food, and we're gonna end the stream now. So like the stream if you haven't, because we've only got 24 likes. Boost the channel a little bit. But enjoy your weekend. Don't get too lazy. Be good. work hard, graft. Yeah, see you all in Discord.